Good morning, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. Today's date is October 17, 2022. It's Monday. Not much as far as the economic calendar goes. We have Empire Manufacturing. The U.S. dollar is lower. The U.S. stocks are higher. Bond yields are lower. Let's get into the technicals. We'll start by taking a look at the euro versus U.S. dollar. Looking at the euro versus U.S. dollar on Friday's trade, we tried to trade above the 200-hour moving average a few times through here. Not much momentum going above that 200-hour moving average. That's the green line in the chart. And so we went down and tested the lower moving average, the 100-hour moving average, and tried to move below it on a number of different occasions, and we could not sustain momentum to the downside as well. So the market closed right near the 100-hour moving average. The price was looking for a break either to the downside or to the upside. And did we get it here today? Well, we saw much of the same that we saw last Friday with a break below the 100-hour moving average that failed. And right now we are trying to break above the 200-hour moving average, or we are breaking above the 200-hour moving average for the second time today. And traders will be very intent on watching to see if the 0.9762 level will now hold support. Okay, we are making a break. We've had a number of times where the market has tried to go above the 200-hour moving average and failed. So this is like the 10th time, and is a 10th time a charm. Traders are looking for more upside would use that 100-hour moving average, maybe down to this 97.50 level, or maybe even like, I don't know, 5 or 10, 6 pips below the 100-hour moving average risk level to lean against. Okay, lean against the 200-hour moving average, stay above that level, and the next target would be up here near the 50% retracement level, near this swing area, which goes all the way back to here. Found support, found resistance against that level, not so much through here, but we reestablished a resistance right here against the levels and here. So getting above this area would be a key target to get through. So right now, risk is near the 0.9762 level, just a little bit below that, maybe 5 pips. If we stay above that level, look for the 50% retracement. Let's take a look at the sterling versus U.S. dollar, and this currency pair had closed. Well, let's just say closed the week right below the 200-hour moving average, above the 100-hour moving average. In early European trading, we saw that pound versus U.S. dollar moved back to the upside. The new chancellor of the Chequer Hunt just got rid of all the stuff that the prior chancellor put into play, and that has helped lower yields. The 10-year yield in the UK is down around 39 basis points as we speak, and that is helping to propel the pound versus U.S. dollar to the upside as investors move back into that currency on the fiscal responsibility, I guess, trade. On the top side, we do have this swing area coming in at 113.50 to 50 to 64. If we get above that area, that would open up the door for further upside. We did try to move above it on Thursday's trade, but failed. We also failed above that area through here, but this level was defined, but way back here. But we need to get above that area in order to push this price further to the upside for the pound versus U.S. dollar. Dollar versus yen remains near its highs. Fairly narrow trading range here today. We did take out the high price that we saw on Friday and trading at, I don't know, 1990 highest level since 1990. I think that's right for this pair. As you can see, we're above the topside channel trend line here, which is more bullish. Eventually, if the price is going to go lower, it needs to go below that rising trend line, get back into this channel. So that would be a risk-defining level for traders in the medium to shorter term. Other than that, the buyers still remain in control. Now, when you're trading at multi-decade highs, you have to start to be concerned, or one of the things that you look for perhaps is just any sort of indication that the bias is turning. I'm not saying that you should go and try to sell a high just because it's a high, because anyone who's tried to sell the dollar versus yen has been hurt. But nevertheless, if you look at something like the 5-minute chart and you're a trader looking for intraday type clues, you don't have a position, maybe want to take advantage of a move to the a corrective move to the downside, you might think to look at the 5-minute chart and just sort of bucket your idea as from your trading perspective off of this chart. And what we see here is we have the high price from Friday, and then we had a attempt to move above it, and then we had another attempt to move above it, and each of those attempts failed, right? And they're sort of very similar and symmetrical, I guess. So that gives you a clue that maybe the sellers are trying to lean that there's more sellers than buyers. The buyers are failing in the shorter term. All right, and so what would have to be done to increase the bearish buys? And one of it is getting below the 100 and 200 bar moving averages on the 5-minute chart. Now, along those lines, we did fail similarly to these breaks up here on the downside. So if we get below these moving average lines through here, and we're trying to do it right now, that would increase the bearish bias. But traders also have to be consider the idea that it's going to fail. So if you want to play that game, you might put your stop, somewhere like right here. If it goes below the 200, put your stop here. And what you're hoping for is a rotation where down further to the downside that starts to see the price move down toward our lows for the day. There are double lows that we saw in the Asian session right through here would be obviously the next target. So you're sort of risking this amount right here for that right there. That's just a way to look at the markets, a way to trade the markets when you're at all-time high levels and you're kind of looking for something to do. All right, so just an idea. The dollar versus Swiss franc is trading lower and trading here today. We're seeing more dollar selling, and especially currently at the moment, and we have seen, I should say, in last week's trading a number of different times below the 100-hour moving average, and this is yet another one. This is 1, 2, 3, 4, I guess 5 days in a row, that the price did trade below the 100-hour moving average, and each of these breaks to the downside have been very short-lived, and then they reestablished support against the moving average. You can see the number of times here. In trading here today, we came down to the 100, and now we're breaking below the level. So guess what, traders? If you want to trade from the short side, where is your risk? If we get back above that 100-hour moving average, you don't want to see that to happen. You want to see the price stay below this level and start to rotate back to the downside. A target level on the downside would be our 200-hour moving average corresponding with this swing area right here. If we get below the 200-hour moving average, it opens the door for further selling pressure. So that's the trade in the dollar versus Swiss. So there you have it, a look at 4 of the major currency pairs. My name is Greg Michalowski. Good fortune through trading. Bye-bye now.